You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for This Week in Futures Options, a program where we break it all down. What's happening in the world of futures options? You're going to find out every week here on TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we tend to think so, Options Insider Radio Network. Thanks to all of you for helping to make our last month there the busiest month in the 15-plus year history of the network. TWIFO, no small part of that. So if you like what you hear, you're on the on-demand side, keep rating and reviewing. It really does help all the new folks continue to discover the content, and for all the algorithms and all the different podcast platforms to continue favoring our stuff. They like us, and it's mostly because you guys like us, so thank you for that. And then, of course, if you want to go above and beyond, want to join us on the pro side, theoptionsinsider.com/pro. That gets you access to exclusive content multiple times a week, live. Whenever the urge strikes you, you can join us live for all of our shows throughout the week. And, of course, our big giveaways, which our next one for the June Pro Trading Crate is coming up soon. So get your name in the hat now. Theoptionsinsider.com/pro is the place to go. If I sound a little bit different, it's because I'm coming at you from the Southern studio this week. So no guest holding down the CME Group and FTSE Russell hot seat. It's really just me holding all the seats down as we head right into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. And we're going to do things a little bit differently this week. It's that time of the year, listeners. it's time to check out what's going on, what the trends have been, and just a nice mid-year checkup on all the action here in the world of futures options. Before we get there, the show is called This Week in Futures Options, so we'll start with our traditional movers and shakers, see what's lighting things up over this past truncated holiday week. Obviously, markets were closed here in the U.S. for the July 4th holiday, so we're going to have some lighter volume on the week, and it's already coming into July now, so it's not exactly busy season out here, but nonetheless, we have some moving and shaking to break down. I'm going to choose this week, so I'm going to mix things up. I'm going to choose the light side because why not? I always choose dark side. So let's go to the light side. Number 5 on the light side this week, the E-mini Russell 2000. You may have heard of that once or twice here on the show. Today, it is coming in at number 5, up 3.5%. So a big day here, big week for the Russell 2000. Good run out there in the equities today. We'll get to that a little bit later in the show. Number 4, lean hogs up 3.73% on the week. Number 3, the E-mini NASDAQ, 4.65% to the good. Number 2, one of our frequent offenders, Bitcoin, up 11.38%. Good little lift for crypto this week. It was number 2 in the other direction last week, off 8.83%. And number 1, an explosive number 1, if you will, pardon the pun, it is Nat Gas, up 12.72%. Again, now 2 of our top 3 offenders are in the number 1 and number 2 spot to the light side this week. Nat Gas was number 4 to the dark side last week, off 4.6%. So Nat Gas moving and shaking yet again. Let's go out to the dark side now. Number 5, we have RBOB off 6% this week. Number 4, heating oil. They are coming for the energy this week. Number 4, heating oil off 6.59%. It was number 1 to the dark side last week, off 10.86%. Number 3, we got KC Wheat off 7.83%. Numero 2 here, we've got Brent off 8.36%. And number 1 to the dark side, we were just talking about this on the show last week with Mr. Gramza. We got the old soybean oil off 13.16%. It was number 4 to the upside last week, up 6.2%. So an intriguing week, a lot to unpack. But before we get there, listeners, I'll do things a little bit differently. Like I mentioned, we just concluded June. It's a perfect time to look back on the first half of the year and see what kind of trends and trades were dominating things. So we thought we'd expand our movers and shakers to look all the way back to the beginning of the year, all the way through the end of June. So let's do that now, listeners. A little bit of the old 6-month review, if you will, for TWIFO. So let's go this year in so far, as opposed to this week in. Let's go to the dark side. Number 5, we have copper off 19.65% so far on the year. So it's been a rough year for copper. Number 4, the NASDAQ. You don't need me to tell you it's been a rough year for the NASDAQ, off 22.68% for number 4. Numero 3 here, we've got lumber, one of our frequent offenders, taking a bath this year, off 45.29%. Number 2, another one of our frequent offenders, we've got Bitcoin off 50.07%. So it's off pretty much exactly 50%. So a rough year. Again, you don't need me to tell you that for Bitcoin. Number 1 to the dark side is a little bit funky. Like I mentioned, it's kind of hard to get a aggregate number for all the different expirations in euro dollars. If you believe this, it's off 990%. It's a weird number. So unfortunately, the number 1 is going to be euro dollars, but maybe a little bit crazy there when you're looking at all the different expirations out there. Let's go to number 5 to the light side. It is WTI, up 31.4% on the year. Obviously, heating oil has come off a bit and all the energy has come off a little bit, but still up strongly on the year on the backs of all the madness going on in Eastern Europe. Number 4, we have lean hogs up 42.09% on the year. Lean hogs. We just had a guest a few weeks ago talking about crazy time butterflies and products like the livestock. So intriguing times to be looking at lean hogs. I know a lot of you were intrigued by that episode. A lot of you asked for that spreadsheet, that data he had on that. So intriguing stuff to be found there on the lean hogs. Number 3, we have heating oil up 46.27%. So not a good number for all of you who need to heat your home this fall, either with that or with nat gas this year. So intriguing stuff here, 46.27% for heating oil. Number 2, it's RBOB, up 50%, almost exactly, 50.1% to be precise. And number 1 in the driver's seat this week, our other of the trifecta, the frequent offender to the upside. It is Nat Gas up 56.97% on the year so far. Any surprises in there for you, listeners? Anything making you scratch your chin and say, Hit us up. Let us know what you think. Speaking of middle of the year and checkup time, it's that time as well to kind of check in on some of the trends, the overall trends in the world of futures options. We like to use our Google Trends data to do that. We do that usually at the beginning of the year and at the midpoint of the year, and we are hanging out there right now. So what better time than the present to break down a little bit of the old trends in the world of futures options? Let's start with that pretty much base term, futures options. Let's look at the overall interest. If you know anything about Google Trends, listeners, they look at the data in terms of the peak over the past year, which will be the 100th percentile, and then 100%, and then all the other numbers will usually be lower than 100. That gives you a sense of where things go. Sometimes a graph like this, futures options, hits that 100 level multiple times throughout the year. So kind of intriguing data. I don't think it's as active of a search term as, let's say, general options trading or something like that. So that could also account for the fact that there are multiple 100s on this graph, but it hit it multiple times in October and in November. It looks like in January again, and then in February, of course, with the invasion. We saw it again in March. So it has flirted with that 100 level multiple times over the course of the past year. Right now, it's still looking pretty frothy, still pretty elevated at 76%. So the overall interest, not quite at the peak, but it's 3/4 of that. So the interest is still pretty strong out there in all things futures options. If we drill down a little bit further to what we're looking at here on the show, futures options trading, for example, then we get a little bit more interesting data point. This is another one that also had multiple peaks throughout the year. It hit it back in late July of last year. It flirted with it again in October. So end of October, early November, right around that Omicron timeframe. That stuff starting to come on the horizon. We flirted with it, didn't quite get there again in the invasion in February. So that's surprising. You might have thought that we would hit that level in the February invasion. It looks like we got up to about an 80, 82 or so in that level, and then flirted with that about that exact same level again in April. So a few times we played with the 100 level, and then we were elevated multiple times throughout the year. Right now, things are trending lower, right around a 39. So futures options trading interest has kind of fallen off a cliff. Again, we are coming at you in the summertime in July, so that could also account for a little bit of that as well. Let's go out to overall more general terms, like let's say commodity prices. That's a search term I think that has been in a lot of people's mind over the course of this past year as a result of all the mad inflation we're seeing out there across the board. Interest in commodity prices peaked the week of March 6th to March 12th of this year. So a few weeks after the invasion in Ukraine, where people really started to see the impact on food prices and energy prices and everything else. So probably understandable that that would be the peak for the year. Then it kind of fell off again. And right now it's at about a 43. So less than half of the interest that it was back in the March 6th to 12th timeframe. Does that surprise you? Kind of surprised me, given the fact that inflation is pretty much talking point number one across a lot of the various news outlets these days. But either way, we have to keep on rolling with the show. Something that's been moving and shaking this week, as well as moving and shaking for the entirety of the year, is energy. So let's start there.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment. You guys know to go to generate these reports for yourselves. CMEgroup.com/TWIFO, TWIFO is the place to go. And if you did that, go into that drop down, scroll down to energy, then over to product family. You're going to see nat gas, and then scroll over there into product, which is nat gas, right at the top of the list there. And that will get you to the natural gas options for this week. And as we mentioned, a shortened, truncated holiday week, so we're going to see lower overall volume numbers. And that is pretty much the case in nat gas this week as well. 276,000 contracts on the tape. Usually on an average week, we're going to see somewhere around 400,000. So clearly a little bit lighter this week as a result of the holiday. Nat gas coming into today's show, 621 in that front future, up about 48.5 cents or about 8.5% just since the start of this week. So really just since Tuesday. So big moves in the last couple of sessions. In terms of action, nat gas trying to trade like an equity right now. 31, almost 32% of that 276,000 contracts coming in that front August contract that has 19 days to go. So very front loaded, very front heavy, which is not at all surprising. I joke about it being like an equity, but we're seeing a lot of whipping around in nat gas. So folks tend to want a little bit more gamma heavy exposure in those types of environments. Hence, a lot of front month loading up, and that's what we're seeing right now. What is the vol in nat gas? Starting to get frothy again. It's up to about an 80, almost an 80 and a half. That's up about a little over 13 points over the course of the past week. So nat gas, we know, can break triple digits pretty easy. Not quite there right now, but also looking pretty frothy when you're seeing equity vol and then VIX around a 26, 25. An 80 in nat gas looks pretty aggressive. In terms of skew, last week, the puts, almost a full percent bid above where the at the money was last week, which was around a 67. This week, the puts have come in a little bit. They're 2.5% cheap. Calls last week, 1.2% bid. This week, 3.8% bid. So a little bit of lean towards the call wing, but nothing extraordinary here. We got a little bit of cheap puts, a little bit of expensive calls, but nothing crazy. Again, we're already looking at an 80 plus vol. So I guess the skew right now is still kind of up for grabs in terms of which way we're going to go. In terms of the action, the most active contract out here in this pretty light holiday trading week, looks like it's the 5 puts in August, leading the dance with about 10,000, 9,300 or so going up, contracts going up on the week. The big days today, nearly 6,000, 5,700 contracts going up today, 2,300 on Tuesday and 1,100 on Wednesday. So opening earlier in the week. Obviously, we don't have today's OI numbers. Also, some action on the 7 calls this week. They've done 8,300 contracts. The big day again today, 5,472 today, 1,800 on Wednesday, about 1,000 on Tuesday. Closing on Tuesday, opening looks like throughout the rest of the week. Obviously, we don't know what's going on from today's OI perspective. It's a little bit of a back and forth. The 5 puts and the 7 calls, which again, we're at the 621, so kind of right around where we're trading from an at-the-money perspective. No 6 puts, nothing along those lines, which is kind of what I expected. Let's go a little bit farther out, listeners. Let's go see if we see any other aberrant or interesting paper here in nat gas. The 10 calls are still trading in March of next year, 5,500 times. So a lot of interest in these March 10 calls. Let me pull these up really quickly and see what's going on. They traded 3,800 times today, 1,675 times on Wednesday. And that's it. Nothing else. Goose egg for the rest of the week. So a lot of action on the March 10s. What do you guys think? Think we'll be back at 10 by March of next year, maybe even sooner? Or is that a bit of a bridge too far? Hit us up. Let us know. I'm curious your thoughts on these levels. You know, we have for a while now seen that 10 option, that 10 strike being very active week after week after week. This week we see it in March, but that's really about it. In December, it's the 7 calls that are the most active. In January, it's the 7s as well. In February, it's the 8 calls. So a little bit of a different regime we find ourselves in than everybody piling into the 10 calls these days. I'm looking to see if I see any other aberrant or interesting prints that are lighting it up. Not a ton, because it is a bit of a truncated holiday week out there. Since we're hanging out in energy right now, let's also head on into our old friend WTI, aka crude oil. Pop up out of that product family, go out of nat gas, go up to the top of the product family list. That'll get you to WTI. Right now, still hanging out north of the triple digits level, 103.30 in that front future. That's off a little over 5 handles, or about 4.75% on this week. In terms of paper, let's see how much paper going up in WTI. Actually, a pretty active week for WTI, given the fact that we've only had a few trading days. This is impressive. 665,000 contracts on the tape in WTI. So crude oil is where the action is this week, listeners. And of that, it's the August contract going out in 8 days that did 34% of the paper. Let's see if we can go a little bit farther out. Actually, it's kind of almost a tie. We have 32% going up in December as well. So we can hang out there. And that's well outside of our frame of reference, which is we'd like to be 2 weeks and longer, listeners, for obvious reasons. The DEES future is at a 91.34. So that's a little bit lower, listeners. In terms of vol, that front contract, they're both trading at about a 60 vol. If we go out to the DEES contract, that's a 53.14. That's up about 3 points on the week. In terms of skew, last week the puts 5.2% bid. This week, 8.6% bid. Calls last week, no one wanted them, 1.3% cheap. This week, they still don't want them, 1.6% cheap. So no interest in the calls right now. It's all puts all the time here in WTI, which is kind of interesting as we're flirting around and breaking through that par strike on a fairly regular basis. In terms of action, what was the big dog out here this week? It was the DEES 150s, listeners, doing 37,000 contracts. That has a whiff of a spread about it. I'm going to look and see if there's some other legs going up out here. There were 32,716 of the 150s traded today. Also, 32,600 of the 149s traded today. My goodness. And we also have 16,000 of the 135s and 16,000 of the 134s. So obviously a 1x2, 135 to 150 type spread, but they did it multiple times, almost like a bit of a mini strip, a 1 point wide strip for each. So yeah, that's an interesting, I think to put it mildly, execution. So a lot of paper, total of about 100,000 contracts going up in this big print here. But wow, 16,000 each of the 134s and 135s. It's not going to be a spread. That would be a nonsensical spread if you were to do it. Why would you buy one and sell the other? So you're probably looking at probably buying both the 134s and perhaps the 135s and then selling both the 149s and the 150s, or perhaps legging into, either way, these are so tight. You know, the upside in energy is and can be a weird place sometimes, and this is one of those prints. Too bad Carly Garner isn't joining us on the show this week. She loves these kind of weird, sizable ratio ladders and verticals like this, and she might even be putting this on. Who knows? So she might be a good one to ask about this one. Weird print, to say the least. And that obviously explains why, it's been such an active week, nearly 100,000 contracts going up in this, I won't say nonsensical, but intriguing spread. And also this weirdly tight vertical taking up a lot of the oxygen in the room out here. Outside of that, let's drop a little bit outside of that. You also have the pars going up, the 100s going up 15,283 times this week. The big day was Monday, 10,300 on Monday, and then 2,300 pretty much every other day this week. Closing on Monday, so some folks taking the DEES pars off on Monday for size. Let's scroll around a little bit, see if we can find any other interesting or aberrant papers. Go out to September. Nearly 12,000 of the 125s traded in September this week. Actually, a little over 12,370 to be precise. The big day is today, 8,500 going up today, 2,700 on Tuesday, 1,100 on Wednesday. By the way, if I was saying Monday earlier in the show, there's obviously no Monday paper. It's all Tuesday and Wednesday this week. The truncated holiday weeks always throw me off here, listeners. So yeah, interesting stuff afoot here. 125s in September and that funky ratio vertical there in December. In terms of the front August contract, it was the 110s doing 17,000 contracts. That was the big dog out there. The big day today, 5,200 on the tape today, almost 5,000 yesterday, and actually I take it back, Tuesday was the big day with about 7,200 on Tuesday. Most of that opening throughout the week. Obviously, we don't have today's paper. So kind of a smorgasbord of paper out here. The 110s in August, we got that funky vertical in December. We got 125s going up out here in September. So kind of a bit of a pick your poison, but all upside all the time here in WTI, at least for this week. What are your thoughts? You think we're heading back north, far north of the par strike? Crude oil and most energy names have been coming in outside of nat gas recently. So you think this is the trend back north? It looks like a lot of paper is leaning that way. Or are we heading back south of the par strike? Hit us up. Let us know, listeners. As we head on into our next product category, it is time to explore the world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's get to it. Let's go into that drop down. Let's pop out of energy and let's go down one to equity indices and then over to U.S. index and then over into the product category to the Russell 2000, which is also on our movers and shakers for this week, up 3.5%. So a nice little pop here for the small caps at a 1772.60 in that front future. If you don't follow the Russell 2000. So still well south of that 2000 level that Sean and I were talking about. It doesn't seem like it was that long ago on the show, but it has been some time since we've been north of that 2000 level, listeners. In terms of action, a decently active week, but again, it was pretty much a truncated holiday week. So you're going to see, outside of that weird spread in WTI, you're probably going to see lower numbers mostly across the board. 25% of the paper this week going up in that week 3 July contract. There's a whopping 8 days to go. Such is life in the equities landscape. Looks like the 1670 puts were leading the dance out there. We also have 1775 calls, so pretty much the at-the-money calls trading pretty actively going out with 1 day to go. Let's go a little bit farther. Oh, here we go. 1570 puts. The end of July, end of month puts here. 1570 puts going up over 500 times. Let's see where the action was. It was pretty much mostly Monday and Tuesday, nothing today. And they were closing. Looks like a 1570, 1670 vertical going up, at least on Monday, 288 times. So it looks like Wednesday, just the 1570s traded, which is odd in and of itself. So a 100-point vertical. Looks like perhaps they were rolling up. They were closing on the 1570s and opening on the 1670 puts. So perhaps rolling their protection up to a little bit more relevant strike. If that's the case, intriguing time to be doing that now. Interesting stuff. You obviously were pretty spooked if you're putting on the 1570s to begin with, but intriguing stuff nonetheless. Let's go on out here. Also weird that the 1570s would trade on their own and be closing for more on Wednesday with no other legs going up there. So a weird day across the board, but pretty active. The 1570 and 1670 puts out here in the end of month July contract. Oh, by the way, we've gotten ahead of ourselves. We haven't even talked about the vol. Let's get out there right now. Let's go to that week 3. Week 3 July is only 8 days to go. So let's go a little bit farther out. Let's go back to that end of month July contract. That has 22 days to go. The vol out there is nearly a 30, 29.87. So dropping below that 30 handle ever so briefly. In terms of the skew last week, the puts 10.8% bid. This week, the puts 9.6% bid, so still a lot of interest in those puts, but a little bit less than it was this time last week. In terms of the calls, let's see. There we go. The calls last week, 9.9% cheap. This week, 10.3% cheap. So intriguing stuff across the board. Speaking of intriguing stuff, we're talking about vol. Let's do the whole equities complex as well from a vol perspective. Coming into showtime, we had RVX, so the VIX of the Russell 2000, at a 31.5, down about 2 1/3 handles from where it was this time last week. VIX cash was at exactly at 26.00 when we kicked off the show. That's down a little over 2, about 2.7 points from where it was this time last week. A VVIX, so the vol at around 85, that's down a little over 4, about 4.25 points from where it was this time last week. So still well below that triple-digit level that a lot of people are keeping an eye on. Vol Q. So the at-the-money vol of the NASDAQ 100 was at a 30.80. That's down about 2.5 points from where it was this time last week. That puts that VIX to RVX spread at 5.5 points. That's about 1/3 of a point wider than it was this time last week. And the VIX to Vol Q spread at about 4.80. That's a little bit, about 1/10 of a point wider than it was this time last week. So there's your vol breakdown for the equity space. And we're seeing some interesting stuff going on in the world of metals, even though we're not seeing a lot of year-over-year action on the metals, with the exception of one product. And that's actually the one I want to hit up this week. So let's head out to the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, welcome to the metals, listeners. Get into that drop down, pop out of equities. We're going to go all the way down to the bottom of the asset class list. And then usually we go to precious and we hang out there. We see the silver and the gold and all the shiny stuff. This time we're going to go down a couple of notches to the base metals. We're going to get base on the show. And we're going to talk about copper because it was on our movers and shakers for the year, off 19.65% over the past 6 months. So intriguing stuff. Also intriguing stuff coming out of CME. They were just tweeting out right before showtime that they're seeing surging copper options volume out there. They have copper options volume reaching record levels posting average daily volumes over 2,900 contracts. That was last year. And then through May of this year, ADV is just shy of 3,500 contracts. That would be about 20% of that trends continued in terms of increase year over year. So it's an intriguing story because copper, if you've been listening to this show for a while, if you've been listening to the previous incarnation, which was the long and short of futures options before this show even launched, you know that copper was never really that active of an option story. It kind of just followed along with what was going on in China, and it didn't really do a lot of paper, and it wasn't that interesting. And then fast forward a few years, and all of a sudden, copper's on our movers and shakers, and it's starting to do some numbers. Let's see what the numbers are right now. We're seeing 33,600 contracts on the tape this week. It's not euro dollars, but also it's blowing the doors off silver, which is the name we talk about a lot here on the show. So copper certainly merits spot here in the metals conversation. Where is copper right now, you might be asking yourself? Well, it's at about 355 or so, off about a nickel on the week, or about 1.5%. So taking a little bit of a break this week, but obviously a rough 6 months for copper. In terms of that, what was it, 33,000 contracts, a little over half, 55% coming in. Yeah, actually, this is the August contract here. Let's see, what is the vol in copper, you might be asking? It is a pretty frothy, 36.5, up 4.25 points. That compares favorably to what we were just talking about in the equity landscape, listeners. And in terms of skew, last week, the puts 2.7% bid. This week, haven't moved, 2.7% bid. Calls last week, nobody wanted to touch them. They were about even to the at the money. This week, they are 1.8% cheap. And in terms of the most active contract this week, and a fairly active, again, this is a shortened holiday week too. So seeing 33,000 contracts in a day when we didn't even have action every day this week, that's pretty impressive for copper. It was the 398 calls, the 3.98 calls. Great strikes out here in copper. Doing 3,031 contracts this week, 1,620 today, 10 yesterday, and then 1,401 on Tuesday. It was opening by one contract on Tuesday, so that's somewhat strange. Looks like we had a 398, 420 vertical going up 1,400 times on Tuesday. That is an intriguing spread. And then we also have today that same vertical going up. Looks like 1,600 on the 398s and 1,100 on the 420. So a little bit of a ratio today. Either way, 398. That's interesting not to see the 4 strike, but the 398 strike against the 420s. You like that vertical, listeners? Are you a copper fan? Hit us up. Let us know. Let's see what else is trading out here this week. In a pretty active week, we've got the SEP contract 320 puts going up 2,300 times this week. Pretty much all of that on Monday. Pretty much most of that opening. And a one lot traded on Wednesday, 56 today, so 2,300 and change trading on Monday. All of that opening, no other legs really going up, so it seems like it was just the 320 puts. Let's look a little bit farther afield, see if we see any other interesting and or aberrant prints here. 380 calls going up nearly 1,000 times, the week 3 July contract. And that looks like that's pretty much the lion's share. The rest of it is pretty actively evenly split across a variety of different expirations out there, listeners. Let's look really quickly, see what else was lighting up our movers and shakers here this week. You know what? Over the course of the past year, or the past 6 months really, so far this year, we have seen a lot of action, obviously, in energy. We started off there. We have seen a lot of action in the equities, and of course, lumber and Bitcoin, WTI. We already talked about that. Surprisingly, over the past 6 months, we are not seeing anything from the ags outside of one name. So let's head out there to explore it right now.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the ags. And you might be thinking, okay, this past year we've seen craziness in wheat and corn, so we're going to head out there. But actually, no, we're not. We're going to go pop out of that metals, go all the way up to the top of the asset class list, go to ags. We're going to drop out of grains and oilseeds where we normally go, and instead go to livestock. Because we're going to go to our old friend Lean Hogs. It is number 4 to the light side movers and shakers over the past 6 months, up 42.09%. My goodness. And you know what? It's doing paper again this week. 55,600 contracts going up on a truncated holiday week. That's blowing the doors off silver. That's blowing the doors off what we were just talking about out there with copper. It's going to blow the doors off a lot of the products we talk about here. So Lean Hogs coming into their own. That's a story in and of itself out here this year. And of that nearly 56,000 contracts, 31.5 going up in the AUG contract. Looks like we have about 36 days to go on that one. If you're saying to yourself, where are Lean Hogs right now? That front future going out in about 8 days is at a 113. If we go a little bit farther out to August, that future's at a 109.5. Both of them are up this week. The AUG future's up about 6.4% on the week. In terms of vol, this one, perhaps not as volatile as you might think. Only about a 25.14, off about a quarter of a point this week. Given all the movement we've seen over the past 6 months, you might be forgiven for expecting that to be at least in the 30s, but that's not what we're seeing, at least not right now. In terms of the skew, last week, the puts, by the way, 31.5% of that nearly 56,000 contracts coming in this AUG contract. And the skew out there, the puts, 9.3% bid were the puts last week. This week, about 6%, 5.9% to be precise. The calls last week, 3.4% cheap. This week, 1.3% cheap out here. And in terms of action, it was a little bit of a battle kind of across the board. We had actually the 115 calls going out on the 15th here in July. Those are doing about 2,100 contracts, and they were active all week. The big day was Wednesday, 1,463. The rest kind of scattered throughout the week. Slightly opening on the 115s. Then we go out to the par calls, the 100 calls. These are actually in the October contract. And these did 1,910 contracts this week. Pretty much the lion's share today. 1,165 today, 600 on Wednesday, and about $1.50 on Tuesday. Back and forth opening to closing on these as well. So kind of all over the place with the paper. And then not to be outdone, the AUG contract, the par puts there going up 1,776, appropriate for the July 4th week. We have 1,776 going up in these par puts. The big day for them was Wednesday as well, 1,327. That was closing 411 today, and only a little bit going up on Tuesday. So kind of scattered paper here in the Lean Hogs, and a lot of it very near dated. All in the front few months is where the lion's share of the paper seems to be going up. Interesting. Does that play well with your time butterflies we were talking about on the show not too long ago? Hit us up, let us know. As the livestock, a surprise mention here on our look back for the movers and shakers so far for the year. All right, and that's going to do it for this Just the Facts, Ma'am edition of TWIFO. Bit of a look back episode as well here, looking back at the year that has been so far. What does the next 6 months hold in store for us? Will it be as rock'em sock'em crazy as the first 6 months? I think we all can hope not, but if past is prologue ever since the pandemic, we all know to expect the unexpected, and you will never be disappointed out there. If there's a product category that was moving this year that we didn't talk about, hit us up. Let us know. We'll see if we can squeeze it onto the show next week. Stay safe out there. We're back again tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. After that, for Options Oddities for all of our pro folks, back on Monday for the option block, all the way through to another Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.